Hi everyone, welcome to Tax Lockdown and Two Smoky Barrels. I just want to take a few minutes to recap on the government's care package that was extended out to taxpayers and businesses. But before I do so, I thought I'd share with you a little care package that was sent to me prior to lockdown. This was sent to me by a friend, appropriately titled Care Package, and it's a wonderful bottle of one of the early releases of whisky from the Cadrona distillery in the South Island. Now, what this care package sends to me, or says to me at the moment, is just how important it is for businesses such as the Cadrona distillery, a small New Zealand business taking on the world in an established market, how important it's going to be for us post-lockdown to look after each other and to support those businesses. So that was a great care package. But to the tax reforms, the government thing, I think the couple of things that need to be really emphasised, aside from the wages subsidy and the bank guarantee schemes, are the reforms around tax losses and the willingness of Inland Revenue to remit late payment penalties and use of money interest. Now, Inland Revenue's early announcement that they would remit use of money interest and late payment penalties when you couldn't pay your tax because of COVID-19 was really welcome and represented an unprecedented willingness to work with you in getting you through this difficult time. What's clear is it's good practice and you should continue to file your tax returns on time. If you can't pay your tax because of COVID-19, we would recommend exploring all existing options and not assuming that you're going to be able to be granted relief from the use of money interest and late payment penalties, because there will be some situations where it's not appropriate, and it is an application that you have to make rather than a guarantee that it will be remitted. But I think the revenue will be very accommodating. And the subject of tax losses, well, they've introduced a 1-year carryback. This is introduced as a temporary relief. But if you have incurred a tax loss in the year to 31 March 2020 or 31 March 2021, you get to carry it back to the previous immediate year. And if you've paid tax in that previous year, you'll get a tax refund. So that's really welcome. Hopefully it might become permanent after appropriate consultation. Secondly, they've introduced a same or similar business test to allow you to carry forward tax losses. Now, carrying forward tax losses is subject to a thing called shareholder continuity. So when you introduce a whole bunch of new investors, you can forfeit your tax losses. So having a same or similar business test will be really welcomed by many companies in that startup kind of phase who are always hungry for capital and looking for new investors. Look, there will be some challenges around how you define what a same or similar business is, and there will be challenges or anti-avoidance provisions to ensure we don't end up with trading and tax loss companies. Don't forget there were other smaller amendments, but equally important. The write-off of low-value assets. So if you increase in threshold from $500 to $5,000, I jokingly say it's about the cost of setting up a home office to allow you to work from home. Tax depreciation in commercial buildings, greater refundability on research and development tax credits, and a whole bunch of relaxation of sort of timelines and administration. So don't ignore your tax, it's still really important. You can find out all of the details from our COVID-19 microsite, and I wish you well, stay healthy, and if you need some help, reach out to BDO, we're here to help. Take care.